Hey guys, welcome back. We are still doing question two of the November 2017 paper, which is on manufacturing. We are currently doing 2.2, which the business that we're preparing books for is gymwear manufacturers. And the information given here is that gym manufacturers is owned by Jan Fix. They produce shoes and shirts for gym training. Jan requires assistance in interpreting his 2017 results. Note that one pair of shoes comprises one unit. All right. So the questions have been given here have been given questions for shirts and then the questions for shoes. We're going to start with the questions for shirts, obviously. So the first question is calculate the break-even point for shirts. All right. So to calculate break-even point, you take the total fixed cost, you divide by the selling price per unit minus the variable cost per unit, and then you get your break-even units. Your break-even point is the point at which if you sell that number of units, you will neither make a profit or a loss. You will make zero. All right, let's go. So the fixed cost is given here as 530,000. The selling price per unit is given as 302, and the variable cost per unit is given as 238. So we have all the tools that we need to calculate the break-even point. So I'm just going to put the formula there for the people that don't know it. So I'm going to say total fixed cost. I'm just going to say TFC, and then I'm going to say divided by selling price per unit minus variable cost per unit. And then we know that the total fixed cost is 530,000. And then we'll divide that by the selling price per unit is 302. And then we know that our variable cost is 238 per unit. And then that will give us a total of 8,282 units. So this business needs to sell 8,282 shirts in order to neither make a profit or a loss. Cool. Let's move on to the next question. So the next question, it says, Jan is not satisfied with the variable cost per unit, even though total variable cost per unit decreased by 6 Rand. And then the first question, it says, identify one variable cost with figures that has not been well controlled. Give two possible reasons for this problem. So let us look at the variable cost for shirts in this case. So if a direct material cost went from 116 to 92, direct labor cost from 100 to 131, selling and distribution cost went from 28 to 15. So from what I'm seeing here is that the direct labor cost per unit is the one that is not being controlled well. So to answer this question, the variable will be the direct labor cost, and I'm going to say it increased direct labor cost. Let's do that. Okay, so we're going to say direct labor cost, it increased from 100 Rand to 131, an increase of 31%. So that's, you put the variable in, so the direct labor cost, and then you put the actual figures in. It increased from 100 to 131, which is an increase of 31%. The reason for this, it could be many reasons. The ones that I thought that maybe workers are not efficient, or maybe workers are not trained properly. The other reason that I would think of was the fact that maybe there's excessive overtime. Excessive overtime could be another problem, and maybe also imposed minimum wage requirements. So it could be many reasons. These are the ones that I've thought of, and any other reason that makes sense is going to be marked correct as long as it makes sense. So try and think of things that make sense when you're answering these kind of questions. Cool. And then the next question, it says, explain why Jan might be concerned about large decreases in the other two variable costs. So the other two variable costs, obviously the direct material cost went down to 92. The selling and distribution cost went down from 28 to 15. So why Jan might be concerned? So when it comes to the direct material cost, direct material cost, it decreased from 116 to 92. It is possible that they are using a cheaper supplier. Jan should be concerned about the quality produced by cheaper material. And then selling and distribution also dropped. So selling and distribution cost decreased from 28 Rand to 15 Rand. Jan must be concerned as this may result in a reduction in revenue. So because now you are advertising way more or less than the previous year, you may see the sales of the business dropping. And then we move on to the next question. Jan does not know why the unit cost of production has increased, but neither his fixed costs nor the variable costs have increased. Explain why this is so. Let us try and understand why it may be so. So you can see here that the variable cost per unit, it actually decreased from 244 to 238 per unit. So if your variable cost decreases, your cost really should be decreasing. But in this situation, we have a fixed cost, a total fixed cost that has remained the same in both 2016 and 2017, but the units that are being produced decreased from 25,000 to 16,100. So the fixed cost per unit has actually increased a lot, because now the same 550,000 is being divided into 16,100 units, whereas it was previously divided between 25 units. So the answer to that, the answer to this question here is that the unit cost of production increased because it increased because the total fixed cost remained the same. I'll just quote 530,000 in 2016 and 2017, despite the number of units produced dropping by 8,900 units from 25,000 to 16,100. So this would be your answer. So you want to make sure that as you're making your point, you are also quoting real numbers that you're getting from the scenario. And now we've finished our questions that relate to shirts. In the next video, we'll be answering questions that relate to shoes. Bye for now.